All right, traders, this is Blake Morrow. Oh, crap, I didn't mean to pause that. Uh, Good morning. Happy Friday, TGIF. What a long week, huh? Such a long week. Like you guys, I'm just pretty ecstatic that it's over. Glad that it's over. Glad that we can move along now, and the presidential race has passed us. But you know what it's done is it's left a big a big wake in its way, and we're seeing it really uh, uh, see it's really you know making a move here, making the markets move here. There's a lot of repercussions to what we're seeing. The big ones that you can probably identify would be like the ones in bonds. I mean, if you take a look at the 30-year bond, I mean actually just absolutely crapping the bed. I'm trying to pull up the charts right now. Um, okay, well, anytime that my chart wants to pop up, if it doesn't, we'll just sit here for a while. I don't know why it's been taking so long to load these charts. There it is. Okay, so here's the 30-year, and this is a massive breakdown in the bond market. Massive breakdown in the bond market, and like I said, the bond market has a lot of repercussions, and one of those repercussions is a really strong move in the dollar. Because yields are going up. It's got a strong move lower in gold because dollars going up. Stocks have brushed off this move thus far, and people feel that this inflation play is going to be a big, infrastructure play and yada yada yada. But I'll tell you guys, I'm not completely sold on the stock market up here. Although I could see that the stock market, this Donald Trump presidency may actually, make for a ridiculous move higher, like a blow off top type of situation. I could almost justify making that argument, as people frantically move back into stocks, and that's probably going to be a problem. But anyway, the things that we have to really pay attention to, in my opinion, as currency traders, we're going to have to pay attention to gold. We're going to have to pay attention to the bond market. As long as the bond market stays broken, I think the dollar has a very, very solid chance of making some pretty extreme gains, and that's what my focus is going to be on. But obviously, I could sit here and talk all day about what I think is going to happen. But what we have to do is we have to prepare for our trading day. So let's go ahead and let's grab our bias chart. Let me get over here and grab it for you. Now let's get started. Excuse me. Let's go over to the euro. Okay, so with the euro dollar, I do have a short in the euro dollar going on right now. Now, I was talking a little bit about how I feel about the dollar earlier, but I'm not going to go into that right at this very moment in time. I want to talk to you about how important the support level is, and let me remove some of the stuff here regarding the dollar. I think at this stage in the game, let's get rid of this. Well, let's keep those. Let's get rid of this. Let's get rid of that. Let's get rid of this. Let's get rid of this. Okay, and let's note a few things here. All right. So first and foremost, from the I don't know if we'll need that. First and foremost, from the election, you can see that the euro dollar, obviously pushed above resistance briefly and back down again, and it really, really turned aggressively, and we've been the euro dollar has been basically on its knees since the election, and it has not been able to trade higher. I actually still have an order outstanding that I need to cancel, but I had orders to sell the euro dollar at higher prices that just never got triggered. Okay, and in my opinion, the euro dollar, is it's sitting on really key support, which I don't know if it's going to break, but I think the risk is that the stops below this 108.50 now are becoming quite, how should I say, juicy to the market. Like the market's probably looking at these stops saying, um, we're right here closing in on support. Okay. Um, so if the dollar, or excuse me, if the euro dollar pushes through the support, the question is how far can we go? And let me zoom out here just a little bit more. Actually, let's go back out to the daily really fast. I'm gonna swing these lines over because I think we need them today. Okay, so let's just keep that like that. Now, um, like I said, I think the stops below this 108.50 now are starting to get juicy, meaning that there's probably a lot of stops building. I mean, look, from a risk reward standpoint, from a risk reward standpoint, you're probably sitting there looking at the euro saying, well, why the hell why don't I just buy the euro right now? I'll just buy the euro right now and I'll just put stops below 108.50, right? I mean, that makes sense. Logical. It makes logical sense. From when you're looking at charts, like let's just say you dismiss everything else and you say, you know what, Blake, I'm not even paying attention to the fundamental reasons why anything's happening, but I'm just looking at the charts. And technically, I mean, it makes sense. I mean, we were down here, pre-election. This is post-election. We're back down at support. Why not go long here and just put stops below here? I'm sure there's a lot of people doing that, and that's what's making this 108.50 so key, because if we break below it, I'm assuming there's going to be a ton of stops sitting below here, and we should trade lower quickly. And so the question is, where can we go if that happens? And because that's what I'm more curious about. I'm assuming that this low breaks. It's not a matter of when or if, it's more when. All right, so that's my 2 cents, and I may be wrong here, but that'd be my 2 cents. Well, then you have to go, well, where's the next target if we break lower? See, if we break through 108.50 and you think, oh, maybe this is only going to be a move down to 108. See, I see the 786 come in at 107.59, 127% come in at 107.30. I wouldn't be surprised if we plow through these lows that we see sub 108, maybe even as early as today, if it happens. Okay, I think it's possible. Then you sprinkle a little gold below 1250 on top of that, and we could trade down pretty aggressively. Okay, so that's major support. I'm not even going to worry about where we're going after that. So resistance at this point to turn the euro higher, like to get the euro, like it bottoms. Let's say it actually does reverse today. Let's say it actually does. Okay, it's right here that is what will really freak out anybody who's short. Okay, it's going to be that 109.50. We break above that, then you're going to get people actually getting squeezed out of the euro dollar. But we'd have to break back above 109.50 basically to take the downside pressure off. Now I'm going to put us in a range, which I actually should put it bearish, but I'm going to put it in a range. But if we break below 108.50, the designation goes back to bearish. Okay. Okay. Let's take a look at the cable. Now the pound's in squeeze mode. And a lot of that's coming from the euro pound. I mean, if you look at the euro pound's getting destroyed. Absolutely destroyed. Who thought the post-Brexit unwind would happen after Donald Trump victory? I mean, who would have thought that's maybe what had caused the pound reversal. But you notice we are really approaching some pretty key support down here. So just FYI, I think you could probably do this. I wouldn't have guessed this. Like I wouldn't have said, oh yeah, if Trump wins, the pound's going to just start screaming. I could not have guessed that. Who would have thunk that? So anyway, um, in the event that the euro pound gets down here to this support, I think that takes the upside pressure off the cable. But the pound's actually really strong at the moment. Okay, so if you look at the pound dollar, Paulie was right, by the way. The dollar Canadian's dipping back below 135. Good call, Paulie. If he's listening in, um, the uh, the let me just try it anyway. The pound dollar, okay, pound dollar is on its way to this resistance. I think this resistance is going to be very, very key, and that is at 127. 127. Well, what is this low here? We're gonna have resistance before that, but I'm gonna put down both 127.95. This 161% extension of this move. You know what? I think I'm going to be more. I think I'm more interested in the 50% retracement of the whole thing. So 127.40 and then 128. Okay, 127.40. Just in case we continue to squeeze, 128. All right. I say we're still in a range. Now, if the cable breaks back above here, that's gonna really start to squeeze above 128. But I still think we're just in a short squeeze, if you will. I don't necessarily feel like I want to stand in front of this, but I think we need to pay real close attention. Yeah, you know what? I have to give kudos to Paulie. I'm gonna tweet it at SPZ Trader called US dollar Canadian back below 135 on the morning edge. Kudos, Paulie. Man, that was pretty good stuff right there. I have to admit for Paulie. Okay. Anyway, we're going back to the cable. Support right now is going to be this breakout point, which comes in at 125.56. So I'll write right now 125.50. 1.2550. Okay, that's going to be support. All right, let's take a look at the dollar Swiss. So with yields rising, the dollar Swiss, it's like I look at it and I'm like, why am I not long this thing? I probably should be long the dollar Swiss, but I'm not long yet. But it doesn't sound like a bad idea. Especially, but the thing is, your risk reward is kind of shoddy here. It's like, okay, well, what am I risking to be long the dollar Swiss? The flip side is we're not going down. So I mean, you can sit there and argue and say, well, we're not dropping, so maybe we're just flagging. Maybe this is just a flag pattern. Of some sort, very sloppy looking. I still think, and I think we talked about it yesterday, I think the resistance is at 99. Support is going to be here at, support is going to be down here at, hold on really quick. So support is going to be down here at 98. Okay. I think 98, maybe 98.20. I think we're just kind of in this range right now. 98.20, resistance 99. It's not really great support and resistance, but I think it's, we have to pay attention to it. So we're in this range as well. Let's go to the dollar yen. Okay, so the dollar yen really is struggling with the 200-day moving average. So the dollar yen, it's interesting. The dollar yen it's a lot like the Swissy here. Here, let's delete that for a second. By the way, I don't know if you guys are watching it. Copper is starting to come down a little bit here. Anyway, here's the dollar yen, and I think the dollar yen is currently working, building a, I think maybe building an argument to quite possibly break higher above 107. Okay. So right now it looks like we're finding support here. Now remember, we are at the 200-day moving average, longer term, but it looks like 106, and we're bouncing between 106 and 107. Okay. 106, 107. And we're bullish here on the dollar yen. It's just a matter of time, in my opinion, before we just break above that too. And we're building a base at this point. Okay. Now let's go over to the, let's do the Canadian really quick. So the dollar CAD just pulled back below 135, as Paul was talking about. Now what we have done, and that's a hell of a candle here. This is a loss of words this morning. That is that's a dark cloud cover reversal in the dollar Canadian, all right, which is a pretty bearish reversal right now. Now we need a confirmation, but see how we did a false breakout above that resistance? That's pretty massive. I was up against channel resistance here, or that trend line resistance. So I'm going to write down 135.50 support. Here, let's go into the hourly here. Let's do this. See, I don't know if that's support. Yeah, this is support. Hey, 130. Well, actually, we probably want to make sure we maintain this support here, 134.55. So 135.50, 134.55. 134.55, because that keeps us with within a bullish higher highs and higher lows. So it's still bullish because we're still breaking higher, and while we're above this 134 or 133, we have to stay bullish here. It's just, having a little bit of a difficult time up at these levels. But yeah, I mean, as long as we're above this 133, we got to stay bullish here. Just that we're knocking our head up against some resistance. All right, guys, when I come back, we're going to do the Kiwi, the Aussie, the dollar index, peso, the out of control peso at 21. I can't believe it. Although I think the peso is going the dollar peso is going a lot higher. Anyway, I'll be back in a few moments. We'll talk about that and more. Don't go anywhere. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Dollar continues to pull back a little bit here. We got the euro bouncing back up to 108.90. The cable's still pretty firm. The Kiwi and the Aussie have bounced a little bit off their lows. Kiwi's still about 20 pips off the lows. The Aussie's a lot firmer, which is great because I'm long the Aussie New Zealand. Let's take a look. We have to continue on here. Actually, we've got to get into the Aussie and the Kiwi. So let's take a look at the Aussie dollar or the Kiwi dollar that happens to be right here. So hold on really fast. Hold on one second. Okay, sorry about that. Where was I at? Okay. Oh, the euro dollar just popped back above 109. All right, so here's the Kiwi. Now the Kiwi, as you can see, is sitting on pretty key support, and I'm going to remove this. We don't need these fibs for right now, and we don't need this one. Okay, we're at a 786 of this retracement. Let's go ahead and look from the very trend lows here, and see the problem with the Kiwi right now is it's probing this trend line. So there's a 618 and a 786 that's holding us. So what that means is a break below 71.70 would be very bearish for the Kiwi. Okay, that means this is extremely important support today, 0.7170. If that support gives way, that, like I said, that's going to be an extremely bearish event for the Kiwi. I'm going to actually put a double asterisk there because, as you can see, it's a 618 and a 786 retracement, and I guess that's all I can do. It's a 786 and a 618 retracement. Okay, confluence, and there's a trend line here. So if we break that, this is where it gets very bearish, right through here. Okay. All right. Okay. Let's take a look at the. Actually, we need resistance here. So where the hell is resistance? Well, that seems pretty logical to me, actually. It's right here, right? That's it. 72.30. And this is range bound for right now, but if we break through that trend line, that might be a bearish event. Okay. All right, let's go to the Aussie dollar. Here's the Aussie. Well, gold's trying to bounce here. Here's the Aussie dollar. The Aussie dollar is, holding some support here. Obviously, these supports are all really key because it's trendline support. I mean, this is really what it boils down to, right? This is all trendline support down here, and we can probably draw this line across the bottom and say that is critical. 75.50. Okay. So while we're above 75.50. We have major support. But if we break below 75.50, ooh, the dollar is under some pressure. Look at the pound. I think a lot of this is the pound dollar ripping. Euro's back above 109. The pound's almost at highs of the day. No, we're actually about 20 pips away from highs. Okay, so anyway, 75.50, and where is resistance? Okay, so resistance for the Aussie. You know what? Let me delete this really quick. Resistance for the Aussie looks to be right about Maybe 76 and a quarter. We're in a range, but if we break below 75.50, that's where it gets really bearish. It's just like the same as the Kiwi. The Kiwi below 71.70 and the Aussie below 71.50, and then it turns really bearish. Okay, let's go into the dollar index. So here's the dollar index, and what the thing I was talking to you guys about earlier, and I was making the point with Paulie, is we are right up against resistance here, which is at 99.20. I'm just going to go ahead and write that down while I can. If the dollar decides to make a move above 99.20, okay, the next resistance is 100, or really the channel resistance at 100.40. And this is, to me, is the argument here, because if the dollar is going to make a move based on rates, gold comes down, and higher inflation, I want to be pre-positioned, and that's why I'm long some dollars right now, because if the dollar actually breaks higher above this resistance, like let's say in the coming weeks, going into December, I want to make sure I'm long, and I want to make sure I've got a position going into that move. And that to me is key, because because I can tell you right now that people are a little hesitant in buying the dollar at the moment, but if we are above this channel resistance, it's going to squeeze. It's going to leave a lot of people in the dust. And I want to make sure I've got a position going into it, because I can make the bullish case for the dollar, fundamentally, especially following this, this election. So, and that to me is going to be really key, is if we can actually make it up here and not reject, but make it up here and break. All right. So anyway, we'll see about this 98.20. We'll see if it can. We'll see if it can. We'll see if it can hold. Now I don't know where support's going to be. Let me see here. This could very easily be support right now. Going off an hourly. I wonder if this is how we're looking at it. All right. I'm going to write down two supports. One where we're at, basically 98.50, because we could be flagging like the yen too, in 98.20. All right. And we're in a range. Okay. Let's go over to the peso. So the US dollar Mexican peso finally hit 21. It hit 21 overnight. And frankly, I think the dollar peso is going higher than 21. I think this is a good place for it to stop and to pause. That's channel resistance up here. 21, I mean, look at that thing. 21, I'll write down 21.30 as being major resistance. You can try to, if you want, try to short the peso up there, but this 21.35 is going to be really key resistance. 21.35. This is bullish. Okay. Now, whoops, any move back down to support will be right here. Just in case we come down. 1990. Yeah, let's get rid of all this stuff. Okay. 1990 will be support. Okay. Let's go over to the US dollar Norwegian krona. Now with crude oil as weak as it is, this US dollar Norwegian krona, well, we're at the inverted head and shoulder pattern. Actually, I should pull that around. Inverted head and shoulder pattern neckline, aren't we? Oops. Okay. I'm going to write down 842 as being major resistance. If the US dollar breaks above 842, you've got to be bullish. Okay. I'm going to be watching that one really carefully today. Support, probably this trend line back down here at 8. That's just roughly right there. Let's grab a trend line. Did you guys know iron ore futures are up 9%? 9. 9. 826. Scott said all fueled by Mr. Trump. Yep, the inflation president he will be known as. US dollar Swedish krona, last but not least, we actually hit an all-time high. And we've come back down after hitting that all-time high. We're really, relatively close to support here. I think we have to continue right down 902 and right there. Let's get rid of this. 912, 902, and bullish. So 9.02. What was 911? Bullish. All right, there you go. Your bias chart is done. It's finished.